You're listening to Scaling Up Services, where we speak with entrepreneurs, authors, business experts, and thought leaders to give you the knowledge and insights you need to scale your service-based business faster and easier. And now, here is your host, business coach Bruce Eckfeldt.
Are you a CEO looking to scale your company faster and easier? Check out Thrive Roundtable. Thrive combines a moderated peer group mastermind, expert one-on-one coaching, access to proven growth tools, and a 24/7 support community. Created by Inc. award-winning CEO and certified scaling up business coach Bruce Eckfeldt, Thrive will help you grow your business more quickly and with less drama. For details on the program, visit eckfeldt.com/thrive. That's ECKFELDT.com/thrive.
Welcome, everyone. This is Scaling Up Services. I'm Bruce Eckfeldt. I'm your host. And our guest today is Brad McKeiver. He is Principal and National Director of Dental Services for LBA Haynes Strand, which is an accounting firm focused primarily on dental practices. And I love this opportunity to speak with Brad and speak with a company who's really focused. I think one of the things I'm always emphasizing and suggesting to the clients that I work with when they're trying to grow and scale their business is you have to find a niche, exploit that niche, really differentiate yourself, find a way to stand out from the crowd, and picking a category like this is a great way to do it. So I'm very curious to have this conversation and how that played out, what they've been able to do since they've been so focused on the dental practice world. Again, it's a great strategy, great insight. I'm excited to have this conversation. With that, Brad, welcome to the program.
Yeah, thank you. Happy to be here.
So let's talk a little bit about background and how you got into kind of dental practice world and how that played out. Was it a conscious choice? Did you fall into it? Tell us about the background and how kind of the accounting practice developed and how you got to where you are today.
Sure. Yeah, a bit of an atypical journey for the traditional CPA. Most of us start out in the Big Four and we work our way into private accounting or smaller firm world, or we stay in the Big Four and work our way up the ladder. Mm-hmm. My background was actually a little different. So I was born and bred in the financial advisory industry and worked in the private wealth management field for a few years after getting out of my schooling. And then, from there, I looked out into the landscape of my resume in the business world and decided a sales career would help broaden my my resume. And so took that opportunity and sold medical devices for a few years and really got to learn the mindset and mentality of working with doctors and hospitals and purchasing groups and things of that nature, and really saw it from the sales side, the product side of their world, and how they leverage that technology in their day-to-day work. So fast forward a couple years as I get ready to start a family and look at my next 10, 15, 30 years of work. Medical device sales are great, but they also require, at that time, a pager on your hip and 24/7 access. Yeah. So I decided to go back towards my classical education and landed on the CPA world to do so. At that time, I thought, well, let's go out and build a niche around doctors. And here in the Charlotte community and many major metropolitan areas, working with doctors meant working with large hospital groups who, frankly, didn't really need or use a lot of outside small CPA, local CPA firms for their work. And so, based off of that conversation and really understanding what market I was entering, dentists became a focus of mine, as they are still primarily privately owned and still looking for good local advisors to help them kind of understand how to work through their practice financials to, better their, not only their practice profits, but, how they leverage that profit into their personal lives.
Yeah. No, and I think it's a good kind of story of finding that niche and identifying areas that you're not going to be able to serve well, and then finding that audience, that target that you have kind of unique capability or particular capability to serve based on where they're at with business. And I like this because it's a service business servicing service businesses. So it's like a double layer here. As you kind of decided to focus on the dental practices, what did you see being their needs sort of above and beyond just kind of straight up, tax prep, kind of services? Like when you look more strategically at, accounting and advisory work around finances, what are the needs that you saw within the dental practice space?
Yeah, I think when I go back and look at kind of launching into the market at the very basic level, their initial need was availability and access, right? Both to their advisor as well as current financial data. Mm-hmm. And I think that's a pretty obvious checkbox in today's environment. A decade ago, it wasn't. It should have been maybe, but it wasn't. And so I think that was an easy box to check. Now, once we got beyond that, it was very clear that, the average practice owner, when they get a balance sheet and a P&L, they look at it and go, what does that, what does that mean? And so, they understood a taxable income and what net income equaled in tax payments, but they didn't always understand how to translate that into comparing to their industry standards and their peers, right? And that's in most industries, right? That's a good benchmark to start with is how do I compare to my peers and industry averages? And that P&L, unless it's properly construed and pushed into other management reporting, can leave you a little short on understanding that information. And so I built kind of our initial platform based off of translating that data into, basic chart mentality that doctors could take 5 minutes to review and understand where they are at.
Interesting.
And we could expand beyond those 5 minutes into deeper conversations based off of however their ratios were being presented to.
Yeah, so it's almost like leveraging their familiarity with looking at a patient chart and graphs and the data they're getting back from reports and pathology and things like that, and kind of treating it the same way from a financial point of view in their business.
Yeah, we wanted to break it into bite sizes that would allow them to get that snapshot, and from that snapshot, you could drill down deeper into areas that were opportunities for improvement.
Yeah, and what were some of the sort of things typically that you would look at, given the kind of business model of a dental practice, either key metrics, KPIs, critical numbers, things that end up being pretty common benchmarks across practices that you could look at to kind of evaluate how a practice was doing, identify, areas of focus. How did you kind of boil the ocean, down to a handful that made sense for practice owners?
Yeah. And, fortunately in dentistry, there are, several national publications, regional newsletters, national consultancy firms and surveys that help us, grab some key statistics out there. And so we leverage the, research that was at our fingertips. And, generally in dentistry, practice owners are looking at, 5 buckets of major expenses. Of course, these buckets have sub-buckets, so to speak, but they really want to focus on their staff costs, both on the admin and clinical side, occupancy, rent, repairs, maintenance, utilities, et cetera. Their supplies costs, including both lab and just traditional dental supplies, and then general overhead, and then, of course, marketing, right? Those are generally the 5 areas that we started with. From there, the conversation expands based off of where the practice is in their life cycle. Are they established? Are they a startup? Are they growing? Are they adding locations? So depending on the life cycle of the practice and its performance, we might dive deeper into, clinical cost. And is it time to expand to another 2 rooms and add a hygienist, for example?
Yeah. It's interesting because I think a lot of people treat accounting as essentially bookkeeping, where I've got to keep records to be able to pay taxes at the end of the year. And I think that it's a missed opportunity to really create insight around your business, facets of your business. I love that you're looking at stages, based on the stage of the company and stage of the practice. What are the important metrics, or what are the expected kind of metrics at different levels? If you're in a high growth scenario, how that's different than if you're in a more of a optimization, like you've saturated, or you feel like you've grown your practice to where you want to be, and you really want to optimize the finances of it. Those are very different objectives and very different goals, and you would treat, or you'd use your financial data very differently to kind of evaluate those things. Are there different KPIs as you're looking at the different stage of practices, sort of different KPIs or different areas of focus that come up as you go from kind of practice to practice, given their growth trajectory or the phase of growth that they're in?
Yeah, they are. They certainly become goal-oriented based off of the practice owner they're working with, the geography they're in, and what are their long-term goals. But I would generally say when you're an established practice, and we can talk about what that means maybe a little later, but if you're established practice, you really are honing in on your true margins and how do those margins compare to where you could and should be per those industry standards. In the startup phase, and that's for a solo location, kind of your traditional quote-unquote mom and pop doctor-owned and led dental practice. With startup doctors that are launching a practice from scratch, right, a de novo start, you can't use those industry standards. They don't make any sense, right?
Yeah, exactly.
Right, and so there we're focused on new patient count, production per month and kind of establishing what a lot of doctors have referred to as their BAM score. And I don't know how family friendly your podcast is.
That's okay. Feel free to use whatever you need to use.
Right. Yeah. So they call it their BAM score. So it's their bare ass minimum, right? And so that's when we're trying to help them back into when do they get to industry standard as their initial target, right? Yeah. What does our revenue run rate need to be, and on what hiring cycle for staff do we get them to industry standard? And so that's the startup doctor. And then as we get into our expanding locations, right, you're adding your second, your third, your fourth location, you need to start adjusting for the fact that you as the doctor owner aren't doing all the doctor work, right? You're not doing all the doctor production. And so now you have to factor in paying someone else at the associate level to help assist you generate your revenue. What does that do to the bottom line?
Yeah, well, that's an interesting one because I see that come up a lot, certainly in early stage companies where you've got an owner operator, and we're kind of looking at the finances or looking at the numbers, and I'll often sit down with a prospect that's looking to grow and scale the business, and I'll ask them, well, how's your profitability? And they'll say, oh, it's great, it's like 20% or 25%, and they'll show me all the money they've taken home, and I'm like, okay, yeah, but how much do you pay yourself? How much are you working in the company? How much are you paying yourself? And then how much profit do you generate? And they're like, oh, well, I bring home a couple $100,000 a year. And thinking, but okay, yeah, but what is it? How much are you working? Like, well, I'm working 80 hours a week. I'm like, okay, well, you better be taking home a couple $100,000 a year if you're working 80,000 a week. And just this whole issue of paying yourself as an operator, for the work that you're doing in the business versus profit. And oftentimes when we actually do the math and we figure out what a market rate is for the work they're doing, their profitability goes from 20-25% to 5% or minus 5%, depending on the severity of the situation. I guess talk to me about how you kind of normalize or deal with the fact that a lot of these folks are going to be owner operators, where they're working in the business as well as owning the business. How does that change the dynamics for you?
Yeah, I think we built, again, based off of kind of the way that the industry standards have for decades kind of evolved, is doctors have. That's one good thing that the industry has done in dentistry is they've always kind of set their standards at not net income but net operating income, right? Yeah. So what are your margins pre quote unquote doctor pay, right? And so this allows you to take the overall expense margins and normalize them across the board, because it's not based off of, whether you are the owner doctor or you have a associate doctor doing the doctor production. Yep. Those are removed from the stats, and we chart those for our practice owners so they can see their true operating margins at, the kind of industry standard and nationally accepted process. Yep. Then beyond that, we help them see their cash flow based off of all their other fringes, their salaries, what they pay associates, what they might have in debt service, so they can see their true take-home dollar to themselves based off their production stats, as well as all the tax items, all the tax boxes we have to check of maximizing where your W-2 should be versus your owner distributions based off of your goal set of retirement planning or health insurance needs or whatever a particular practice owner has. Mm-hmm. And so an area that we focused on early with that KPI review that we did was being able to show them both their industry standard operating margins as well as that below that line, where is the money actually getting into your pocket versus where is it going to your debt service, to your associate, or to other expenses that are considered non-operating.
Got it. Oh, no, and I could see it sort of separating that out gives a nice kind of apples to apples comparison, not only between companies, but actually as the company gets bigger or as a practice starts to grow, you can still kind of plot that regardless of how many practices they have or how many locations they have, and because a good benchmark. Talk to me about how, I guess to the extent that you see kind of a different strategy or a different operating model if an owner is looking at just kind of creating one or two locations and really kind of maximizing it versus I will call it a more entrepreneurial practice owner who's looking to really do make a play at dozens of practices in potentially multiple cities and stuff. Like what do you notice as being the difference, or what's the strategy or the approach difference for you when it comes to the kind of the financial advising side of it?
Yeah, it's a great question, and one that we certainly spent a lot of time the last, I'd say 3 to 4 years as here in the North Carolina market, the entrepreneurial approach to dentistry has become a growing phenomenon, so to speak. Mm-hmm. I think I'd start by saying that there's not a right or a wrong way, right? When you think about the practice owners we work with,
Sure.
And we work with a ton of multi-location owners that, that's their goal set, and they're doing a fantastic job of breeding a great culture, a family-based culture in their practice locations. And they have an approach where that's where they want to go to market. We have other family offices that have been solo doctor-owned and led for years and will continue to be, and that's their comfortable place. Both of those owners can have vastly successful careers. It's just a matter of how they want to take it to market. And so we try to understand the personality. In my mind, it starts with the person, right? We got to understand the doctor. What are their goals? And even if they want to grow a multiple practice location, how do they want to do it, right? Do they want to do it as the leading entrepreneur, or do they want to stay the doctor, right? And bring in professionals to help advise them on their growth strategy. And we have worked with practice owners on both sides of that equation, right? Who have brought in folks, both external advisors as well as internal hires, to help them lead and grow their practices. And they've been that clinician, right? Establishing the culture, making sure that dentistry stays the number one target. And we've had other doctor owners who are more entrepreneurial in nature and have taken on a lot of that growth profile themselves. So I think it really depends on the person. But I think if you want to be a growing practice, one of the additional KPIs, so to speak, that you need to bring in is really understanding the structure of your debt, its repayment cycle, and how that affects your debt covenants. That's one of the primary leverage points that keep growth down for a practice who wants to acquire and build additional locations, is making sure they understand their debt model, and how your EBITDA and your net operating income affect your debt service ratios for ongoing growth.
Yeah. And where are you finding, how are most of these practices finding the capital to do the growth? Are they self-financing? Are they they're taking on debt? Are they doing equity deals? I mean, what have you noticed as being the general model for this kind of professional practice?
If the general model, especially if you're, sub 20 locations and you're hoping to grow into that range, is still kind of bank-led debt financing, maybe with a sprinkling of some seller financing or personal investments in that. But bank-led debt financing, the dental industry is very fortunate to have a lot of really good banks out there that do a great job of lending to dentists, are invested in their success and want to grow with them. And so it's a great field for being able to grow through partnering with a bank versus some other industries just aren't that fortunate, right?
Yeah.
And that's got to do with the margins, and the success rate of the average practice is just phenomenal.
Yeah. And just the formula is reasonably known. You kind of know what you need to go into it, how to operate it, what it's going to take to be successful. And most of the debt is used for building out offices, equipment, things like that, marketing, or how are most of these people
so
using it?
A build out for a startup, so equipment, construction, working capital, marketing, or looking at practice acquisitions. If a retiring doctor is looking to exit, can they buy that practice from that doctor? And help continue that practice location.
Yeah, you mentioned it, but I'd be curious to talk a little bit more about it. Is this whole, what does the owner want to do? Do they want to stay the dental professional? Do they want to become the CEO, the operational head? Do they want to, focus on finding deals? I mean, there's as you grow, there's lots of different roles you could fill, and I think that kind of diagnosing or figuring out what role that practice owner wants to play is a really important one. And my guess is if you get it wrong, or if they don't choose right, it can be very difficult. What have you noticed about that process, and how have you helped owners really kind of answer that question effectively so they're going to be successful?
Yeah, I think this is a great question as far as scaling goes. And I shared with several of our practice owners that often, a dental practice and a CPA firm don't operate too much indifferent from one another, right? We have different titles, but we've got doctors and associates and hygienists and office administrators in a CPA firm, much like a dental practice. And I think there's been a lot of interplay between, as I looked at my practice and trying to, scale our growth, both with the amount of practices we service, but also with the services we provide. One of the areas that I had to add to our pipeline of services was the ability to sit down with a doctor and attach their financial and life goals with an organizational and risk assessment process, where we could help show them, here's where you are today, here's where you want to be in 5, 8, 10 years. Let's talk about the roles that are going to be required along that growth profile, and really literally draft out an org chart for them and help them understand how, as they grow, their needs will grow and how they can fill that org chart out.
Yeah. Really kind of putting that, I think that having a map, having a plan, a map for what the future is going to look like, and then identifying, well, what seat do you want to sit in the future, and then how are you going to fill these other seats, both technically, but also, from a culture point of view, from a style point of view. How do you make sure you get the right people surrounding you so that you can be successful? And it's about being on the same page. Sometimes it's about creating some diversity, bringing people in that might think differently than you are, or add skills and capabilities. But that kind of organizational planning is a key one, I find. And a lot of times, if you don't get it right, you can spend a long time undoing that and trying to rebuild that. It can be painful. Yeah. So let's talk a little bit about, applying some of these things to other professional services. I mean, I think the benefit of the dental practice is that it's quite well known. The benchmarks are there. But if you're in other professional services, what are the general things that you think become important when you look at kind of the numbers, looking at how you collect data, financial data, other kind of data to make better business decisions around the growth and scaling of the company? What are some key things that you would look at, for other professional services, not just dental?
Yeah, I think timeliness is one that, no matter what industry you're in, the timeliness of your financial data and, of course, the accuracy of it. How quickly can we get our hands on the data? And then how do we combine both the quote-unquote tax or CPA accounting side of it with the practice management operational side of it? And so many professional services live in two worlds, right? They have an accounting system separated from their production system. And so how can we build a management philosophy that allows you to look at both of those and as real time as possible that your budget allows, right? So I think timeliness is certainly one. And I guess I could maybe expand what I call the 3 T's to 4 T's, considering I just started with the timeliness. But
sure, yeah.
What I talk a lot about with my team as we've grown is technology, training, and trust. And I think that spreads across other professional services. And I know even in dentistry it applies. I think, being aware of the technologies that exist and how you can utilize them in your business to give better service to your client base, whether that's dental clients or if you're a law firm. But leverage technology and then train your staff to appropriately use that technology to be an advisor and give, access to more information to your client base. And I think that breeds trust both in your clients to come to you when they need answers, but it also allows the doctor, the CPA, the attorney to trust their staff that they've been equipped with the right information and training to give the end user, the client, the patient, the information they need to go on about their day and help build their business and make their life better.
Yeah, no, it makes sense. I mean, I think that it's always a challenge of kind of figuring out what are the tools that we should really implement, and do we buy them? Do we build them? I've seen a lot of companies, spend a lot of money on technology and end up really not getting the return that they hoped.
Not using it.
Well, yeah, I think it's interesting because they haven't operationalized it. They haven't figured out how to, get their entire team, their team, the customers, patients, clients that they have using it as well. And sometimes it's wishful thinking. Sometimes they really haven't investigated it to figure out, well, how hard is it to use, or how likely are people going to use it? And then they end up spending a lot of money on something that ends up gathering dust or worse, making their systems more complicated. Any other kind of best practices or things that you've learned in working with some of these folks? Things that typically are missed in professional services in terms of things that aren't managed particularly well, or things that are not considered that, later end up becoming a problem and you have to kind of go back and do a lot of rework?
Yeah. I mean, if I think back about what experiences that some of our folks have shared from just putting my CPA hat back on, would be one of their largest line items that it does not show up in their accounting software, in their P&L, is the tax expense that the individual owner pays, right? Most of these practices are flow-through owners, meaning they're an S-corp partnership or, sole proprietor. And so that net income hits their 1040 and there's a tax bill due, right? Yep. And so one of the things that a CPA is, known for is filing taxes and trying to develop tax strategy. What we find in a lot of these services is one of their largest line items is that the tax checks they write to the government every year. And so managing those tax outcomes throughout the year so they're not caught with any surprises is incredibly important as they try to build a budget and cash flow model for the growth of their businesses. If they have to all of a sudden pay taxes they're not expecting, it takes money out of their pocket that they might have had other plans for. Yeah. And so even though it's not on the P&L, it has to be something that a professional services owner is aware of. Yeah. If you are growing, you are going to owe more taxes unless you put strategies in place that help offset that growth. Yeah. Right. And it's not the worst thing in the world to write a check to the government, right? That means you've been successful, but at least be aware that it's coming, know how much it's going to be. And if you are going to put strategies in place, and I think this is sometimes forgotten, if you're going to put strategies in place to reduce the taxes and you want to grow, know that can impact your ability to go capture more debt to grow. And so understanding how all those components work together is something that's often left on the table.
Yeah, that's a fascinating one. I've seen that happen again and again where people have been, extremely aggressive on tax avoidance strategies and they've done a great job, but then they go to, borrow, $500,000, $1 million to do a build out or something. And the, bank will look at them and say, well, look, you're not bankable. I mean, we can't loan you this because you're not showing profit or you're not, the way that you've done it, and then you get into this game of trying to show them, well, no, I really have developed profit, but I've just, I've done this to avoid the taxes. So yes, there is a need to look at your plans and look at your goals and anticipate if you're going to be going out and, either getting debt or selling the company or doing an acquisition in 3, 4, 5 years out. And if you don't, show the income that is going to be what the valuation is based on, you may actually end up hurting yourself in terms of, what the transaction looks like. So yeah, I think that having a real good understanding of, well, what strategy you're employing, why are you employing them, what are the trade-offs, and how is it going to impact you over the coming years is a good one. And I think a lot of people end up falling down on it. What else do you see that, kind of drives, if you kind of think through the, successfully built a practice, you're looking at doing a sale, what are the other factors for you that go into kind of that valuation side when you're, looking at, either a transaction or doing some kind of sale of the practice? What factors into the money or the terms or the valuation that you're going to get?
Sure. Yeah, and again, in dentistry, there are some, I'm fortunate to have a long history of industry guidelines. Now, they continue to change and update based off of current markets. But, historically, solo dental practices really clung to the idea of a percentage of collections as a primary valuation driver. Cash flow is always a valuation driver. And as we've grown into the multi-location PE world, of course, EBITDA and multiples of EBITDA become the primary discussion points. So owners need to be aware of those items if they're looking at exit strategy and working to, properly position those specific metrics. But I tell you, the one thing that I think has rang true more the last maybe 9 to 12 months than the prior is culture. Dentist and dentistry is one of the best groups of clients that I've ever worked with as far as just, how they care about their patients, how they care about their staff. And so as I've had several doctors buy practices and or sell practices over the last 9, 12 months where they've got plenty of buyers, right? And they've taken lower offers based off of a cultural fit because they care so much about the transition going well. That's not every doctor, but my experience has been that they really are heartfelt in making sure that their staff and their patients have a great experience after they transition out of practice. And so culture has been something that as I've worked with a lot of folks on the buy side, right, that them being able to make sure that they can identify their mission statement for that practice and their goal for it has been an important part of the conversation that we want to help them bring to the table when they're going to make an offer on a practice.
Yeah, and I think that's a good insight. I've worked with some medical practices, and one of the big things they we're focused on is, during acquisitions, like you just need to make sure you have a cultural fit, because the last thing you want to do is make an acquisition and have, all the staff leave and all the patients leave in 6 months, because then you're like, what was the point? We just blew a whole bunch of money and, we're not getting the return that we bought. And in terms of time frame, if you have a professional services practice who, has ambitions of doing a sale, selling their company, what is the time frame that you kind of need to start preparing for this? Is this, a couple months before you hope to sell, a couple of years before you sell? What is your general kind of heuristic when it comes to, when you start taking actions to prepare yourself and your company for sale?
Yeah, I think in an ideal world, which, frankly doesn't exist a lot, right? But in an ideal world, you probably start 5 years out and really trying to take that, first couple years to get your systems and processes in place, well document what you're doing, try to grow along that stretch of time. That way, as you get into that 3-year look back, you have a really clean set of books, easily identifiable EBITDAs, cash flows, and collection modeling, and processes and systems in place that you can transfer to a new owner. Yeah. Now, the reality is that doesn't happen, right? The reality is somebody wakes up one day and they say, hey, let's go sell a practice, or they're just ready to retire.
Yeah.
We've all seen that, and you can get that done, right, quickly, and specifically in the dentistry world. So if you're not going to start 5 years out and really process it, I think if you give yourself the ability to look at a 12 to 18 month period, you can still get a lot done in that 12 to 18 months to take your practice to market at max value that you're able to, versus just throwing it out on the market, 2 to 4 weeks after you decide you want to list it.
Yeah, you're going to get hurt. Valuation is going to get hurt on that. Yeah, it's interesting. We just had this conversation with a client the other day, and we were talking about, kind of the 5-year plan. And, there was this like, well, I'm not really sure. I don't really have any ambitions to sell, but I'm not quite sure. And my advice was, you always want to kind of be operating a business that is highly sellable. I'd rather have the option to sell and not take it than need the option to sell and not be able to do it, because the fact is, you never know. You never know. You're going to wake up one day, you're going to want to do something different. Situations can change. Life events can happen where having a well-honed, sellable company can be a huge asset. And the reverse, if you haven't really thought about it and you get stuck in kind of a fire sale, it can really be a value destruction kind of situation. So good advice, good insights. Brad, if people want to find out more about you, about LBA Haynes Strand, what's the best way to get that information?
Yeah, certainly they could email me direct at Brad McKeiver at lbahs.com. So that's BRADMCKEI, V as in Victor, ER at lbhs.com. So it's a mouthful, but that's my email, and happy to be available via email. They can also look at us up in a couple places. So www.lbahs.com. And again, specific to our dentistry niche, our website is yourdentalaccountant.com.
Excellent. I will make sure that all those links and the email are in the show notes so people can grab those and get a hold of you. Brad, this has been a pleasure. I love talking with folks who have developed a focus, a niche, carved out a good strategy. It's always fascinating to hear the insights that you can develop once you really get into a space and own it. So thank you for making the time. Thank you for sharing your insights. I think it's been really valuable for our audience. I really appreciate it.
Yeah, absolutely. I had a great time.
You've been listening to Scaling Up Services with business coach Bruce Eckfeldt. To find a full list of podcast episodes, download the tools and worksheets, and access other great content, visit the website at scalingupservices.com. And don't forget to sign up for the free newsletter at scalingupservices.com/newsletter.